Hi, Michael Glennon from Glennon Capital. Today we're going to talk about one of the subjective factors that we look at when we're making investments. So we have to make a subjective assessment about the quality of management, but also about the quality of the board of directors that are involved with those companies. So one of the things we do is we go back and we have a look at where these directors have been before, whether they're on a lot of public company boards, what public company boards they've been on prior to the company that we're looking at, what their history was, their executive history when they were working full-time in operational businesses. So we look at all those things and we make a subjective assessment about the directors, where they've been and what they've done. It can get slightly difficult in some of the smaller companies because this might be their first role, and it is hard for some of the smaller companies to attract good directors, which means it's even more important to make sure that those directors haven't been involved in corporate failures and things like that. So if they've been involved in a company that's gone broke or has been delisted, something like that, then that's a director that we really want to stay away from, and we're very cautious about that situation. And boards should be very careful about putting those people on to represent them and guide the direction of their business. And so, an example of that was happened to me very recently, just privately. I engaged a private unlisted business to do some work for me. Terrible, very negligent, and I spoke to my lawyer about taking legal action. I went through and I had a look at the directors of this business, and lo and behold, one of the directors of the private business had been associated with some public company failures. And what that really showed to me was that he was someone who was guiding a business, didn't really care about the customer experience, was very defensive and very litigious when in a very simple case, where the company was quite clearly wrong. I didn't do anything about it. I chose to firstly not use them again, but we won't invest where that director's a director again. And just before Christmas, we had a company come in, and I'd known maybe 15 years ago one of the directors had been associated with a company that had gone broke that we had been looking at, and I remembered that. We've stayed away from that investment. It might be a great investment, but long term, that person has shown poor guidance of a public company and destroyed shareholder value. So very important to make sure you look at the directors, look at their track record, because many of these people have poor ethics, make poor decisions, and that leads to a poor investment. So things to avoid, bad directors. Thanks for watching. I'm Michael Glennon.